Hey everybody, President Bryn here with our Trader User Group Weekly Roundup. This is for the trading week ending October 9th, 2015. What I've got on the screen here is the E-mini S&P 500 futures, a daily chart. Down below I have the volume, and I wanted to show you guys a couple of things. When we came down and then we had that sharp move off the bottom, you could see the volume. I mean, it was a lot higher. And now we've all of a sudden the volume has just been a lot lower, right? I mean, we're not getting the kind of volume I would like to see in participation coming up to these highs up here. So, when I look at this, we've got to be careful here. So now, if I were to zoom in again and say, okay, well, this volume in that big move right there off of that bottom, right in this area here, you can see just, the height of the volume. And then when we pull back to here and then we went back up and made a new high right there, the volume was very, very low. And then we came down here, did pretty much a double test or a double tap at the bottom, right, like this. And then we shot all the way back up here. And again, the volume is still very similar right here, very, very low. It's not up in this area right here. So we're not getting the kind of participation. What this tells me is that, I'm seeing a lot of buy stops being taken out. There were a lot of people short when the market came down like this. And then, what happens when you have these big, huge drops like this? Everybody gets short. But what typically happens is the people that are really late to the game are getting short down in this area here. And then they're putting their stops up in this area here. So when you get this big move up, you get these buy stops that take out their short positions. And then that gives us this peak up in this area here. And I'm kind of seeing that not only right there, but here as well. Okay. So we're getting not the kind of participation I would like to see, although we are erasing some of the huge technical damage that we had when we had this big move back here, but not the kind of volume I would like to see. Okay. Now the other thing that I've got on this daily chart here, and I've just got it on, I've taken all my other indicators off, is I've got the fibs on here, and I didn't choose the high for 2015 of 2134. I kept it right at that level there, which is, as you can see, as I extend it around, this is where the markets tended to settle in for about 4 weeks or so before we started that big drop in the middle of August. So in measuring this peak to trough right down here, you can see here the extensions off the lows here. We're just above the 61.8% at 2002. Now, what I've been telling our members is we've got a huge, huge amount of resistance right at that level right there. It's a resistance zone, and it runs about 1992 roughly, all the way up, peaking out around 2020 roughly in that area there. So I'm calling it our R1 zone. So it's our first level of resistance, and it's a very wide zone. The reason why it's a wide zone is we got a hell of a lot of volatility. So if we can punch through this, and you'll see that the 200 EMA, this yellow line, is just above that. If we can punch through this and then hold it on this daily chart, okay, hold it through close, and then the next day or the next trading day, hold it and provide support, then I think we're going to come up and challenge these areas up here, which would put us up around 2100. Now, it's amazing the reason why we find ourselves up here, even given the slowdown in China, almost zero inflation. You could probably argue some deflation in the European markets, and then here in the US, we are expanding, but extremely slow. In fact, over the past couple of months, we're kind of decelerating our growth that we had early in the year, and even that was kind of pitiful growth. The only reason why we find ourselves up in this area here is, the Feds have been very soft, and they, just through the jobless report and then the employment situation where employment came in at 5.1%, the Feds are basically just putting out there that they don't want to spook the markets, so they're probably going to lay off. In fact, the Fed funds futures are indicating that the rates won't go up probably till the end of this year, or probably more likely 2016. In fact, I had heard some reports saying the Feds are even considering more QE. Really crazy stuff. At the end of the day, none of that stuff really matters, guys. We're up in this really tough resistance zone right here. If we don't punch through it, we're probably going to have a nice little pullback into this area here, where I would find support more likely around the 1940 area, okay, up to about let's call it 1960, rough in that area right there. Another 20-point wide move, but I would find us back down here again fairly quickly. Now, next week is going to be our monthly option expiration week, and typically we see Monday and Tuesday kind of a steady as she goes, maybe a little bit of a pullback, and then a grind higher as we go through the end of the week. But we've got next week is where we kicked off earnings this past week, but we got about 150 companies reporting earnings next week, and then close to 200 the week after. So we're going to really get into earnings. And people aren't going to be watching earnings per share now. What they're going to be watching for is the forward guidance. This is where we're sitting right now. I think the markets are susceptible to a bigger down move than an up move. I don't see what's going to get us up in this area unless we have really good earnings, right? If we have really good, strong earnings, that could get us up into this area. But also be careful. I think with that unemployment situation report, we're kind of into this same scenario we found ourselves in for quite some time. And this is what happens when the Feds start meddling. All these central banks from Japan to China to Europe to Great Britain to the United States, just really a mess here with all the central bank stimulus that we got going on. But we could be in one of these situations where bad news is good news and good news is bad news. Meaning if we have good news, the markets are starting, earnings are starting to come in stronger and we're up in this area up here, then that could be bad news because now the Feds could reduce rates and then we could get this roll over again. Well, you're going to bank. What I'm telling our members is don't beat your head against the wall. Don't try and figure out what is going to happen and how the market's going to react. Don't try and figure it out. Follow where the price action goes, and you're going to be you're going to feel 100% better. You're not going to hit the peaks, and you're not going to hit the troughs, but you're going to be able to catch the bulk of the move. Okay, so that's what we want to do. Now, as we go into Monday, as I said, we're in this really tight zone right here. Okay, it's a tight R1 zone. You can see we took out the 50 EMA very handily. The 50 EMA is roughly at about 1982 and some change. Okay, and we took that out. You can see the 50 EMA, the trajectory started to turn up a little bit. There's the 200 EMA. That's for all practical purposes flat right now. We're going to get a challenge up in this area here, and I guess it's appropriate that this week we're going to be getting into heavy earnings. Remember, the earnings forecast, this is supposed to be, they're projected from what I've seen, 5.1% pullback in year-over-year earnings per share growth from last year. That's not good, but that means also that the bar has been lowered so low that it's going to be a lot easier for companies to hit their earnings. So let's see where we're going to finish this up. Don't try and guess because it's a coin toss. Follow the price action and follow the key pivots. Now, if we look at the daily chart, as I said, we got a couple of key pivots on here. Right in this area here, which is just south of 2020, okay? It's a key pivot for us. It's a pivot high. Key pivot low is down here right at about 1860, which we found right here too. For our members, remember we had this slope like that, and if I bring it up, if I bring it up like that, we're right on the lower boundary of that slope. It's a rising wedge, but a bearish wedge, and we measured the distance of that. It gave us 92 points, which meant when we broke here, the odds favor a pullback 92 points. We came down here to 1860, and 92 points would have put us at about 1853 or so. So we came very close to our measuring objective, and then bam, we just took off to the races, okay? But again, on lower volume. So now it's going to be a very interesting week this week to see where all the markets are. I will say another thing about this, and I'm going to pull this up and show you guys. If we look at the VIX, on Friday, and let me turn my drawing tool off here for a second. Let's get rid of this here. So if we look at the VIX on Friday, and let me just kind of extend it out a little bit, and let's kind of see where we've been here. You can see right here, we've had a steady, slow progression back to the downside here, okay, on the VIX. We're still in this wide range here that runs from about a little bit over 15 and a half all the way up to about 2360 roughly. We've been in this range here, but the reason why I'm bringing up the VIX is because late this week, Thursday or Friday morning, we finally got back into a normalization term structure for the VIX futures. Basically, that means the further out in time you go with volatility futures, the higher the volatility should be. We've been in a backwardation market. Right now, the VIX finished Friday at 1708. And if we look at the October volatility futures, you'll see we finished October at 18.17. So that puts us in a normalization mode or a contango mode. And if we look at November, you'll see November is at 1837, slightly higher than October. And again, if we go all the way out to December, you'll see the December futures are at 18.72. So we are in now a contango environment, although we are still elevated volatility wise. So there is still a lot of fear out in the market here. Now, if I come back to the E-minis, just to show you one other thing, to show you just how decimated the market is, I'm going to put all my other indicators on the screen here. Now it looks very busy. But as I elongate this out, you can see, or I want to show you just where we are. You can see right there, that was the opening price for the E-minis for 2015. We finished at 2007.5, right in this area here. So we are still about 48 points roughly south of where we opened 2015, roughly. So we are still underwater here, okay, a pretty good bit. The RSI regained its 50 level, which is a good sign, okay, but on light volume, okay. The other thing I will show here is that if we look at our stochastics, you can see here we're well elevated up here, almost at 100. So I do expect some pullback. And if I take us down to the 2-hour chart, which really gives us a better view of the or a more tight view, if you will, of this huge move up that we've run here. And let me put it back out on a stochastic so that you can see it from a bearish divergence standpoint. And let's just zoom in. You can see in this area right here, we've got some bearish divergence setting up, but it's not a clean divergence signal. That big move there gave us that high, and then we kind of had this move right here, which gave us some divergence. We had a little bit of a pullback, but not very much, and now we banged up to this level here, which gave us some more divergence from that level there. So we're still susceptible to a pullback into a little support zone here or a wider support zone right there. Okay, so that's where we're sitting as I speak, as we start, as we look at the markets as we open up on Monday. Or early this next week, okay? So that is the E-minis. Now the strongest market I'll show you is Nasdaq, which I've been in and out of, having fun with it. If we look at Nasdaq, and let me take you to the daily chart first, and I'm going to take all these drawings off the screen so that you can see. On Nasdaq, the pattern looks very similar, but on Nasdaq, if you remember, we had a low here, and if I were to draw a line over, the E-minis came right back down there. Nasdaq didn't quite do it, and now we're right here. We've regained right at that area there, both the 50 and the 200 EMA, and they look like if we continue moving up, it's going to cross back up again. We had a minor cross or a 50 or 200 cross here, but they're both, the vector is almost straightforward like that. And now we're sitting here. So we've got a stronger market in Nasdaq. And if I were to extend this zone like this, you can see It's a little bit of a shaded zone here, but you can see coming all the way over like that. We're right in this resistance zone right here, right? And you could see right there it provided support. Um, and this is the area here. Key pivot high is sitting right there, right around 44.50, just about. If we can take that out, we're going to go up higher. The other thing I would also draw on here, let me just clean this up so that you could see. I could draw that line just like that, right? All right, so that is the way I'm looking at this market as we go into Monday on our on Nasdaq. If we take this out, there's a little minor pivot right there that also serves right in this area here. We take that out and it serves as support. Then we're going to be moving up on Nasdaq. All right, so we've had a complete turnaround in the latter part of the week. In fact, this week was the strongest week we've had for 2015 as far as market movement goes. If I put all my indicators back on the screen here, you can see where we are. Also, this blue dashed line, just like the E-minis, we've regained our opening price for the year. Okay, we've regained the price for the year, and I'm just going to put this on here because it's a valid line as well. Just like that. In fact, what I'm going to do, let me do it another way. I'm going to put I'm going to put a trend line on here, probably be a little bit better, just about like that. Okay, so boom, there we go, right like there. So we've got that out of the way. I'm going to get that off the screen, and I'm going to leave this channel here because if I step out, you can see the validity of that channel as we've been moving up. And there it is right there. Okay, so we've had this huge downward movement. If we punch through it, we got a little zone right here that we got to punch through, but it'll be very interesting. We got to follow the price action. If we look at the volume, you'll see the volume on Nasdaq's been a little bit stronger. It's still weak in comparison to that first move up. Okay, again, volume is going to be important here, guys. You can see that big move up right there. Met with good strong volume right there. Most of those are buy stops being triggered from that big huge move down there. And then we pull back, and then that higher move right there, the volume just fell off the table. Not a lot of new longs. We came down to the bottom of a support zone, and then boom, we moved right up, back up there again. Not a lot of new longs. We should be back up in this area here. So this tells me that there's still a lot of longs or new money sitting on the sidelines waiting to see how earnings play themselves out. We got to be careful here, guys, because it will not take a lot to send that rolling right back down again, and volatility going, or sending the term structure of volatility back into a backwardation environment. Okay, so that's kind of where we're sitting. Now, we've got a lot of stocks that we're following that have done very well for us. The one thing I will also point out, we've got next year is going to be a really key year for currencies. For our members, there's going to be, I think, some huge opportunities in the currency market. We got a number of things going on with the IMF, and there's just some great things that are going to be happening in the currency market. We're in the currencies now. And for our members, you know what we're tracking, and I think it's going to be a lot of fun. Also, we're in the precious metals market with silver and gold. We've had a pretty good move in gold. We'll look at silver right here, and as you can see, and let me just put it back on the RSI here, you can see this big move in silver that we've had off the bottom. Almost from a standpoint of, we had, if I were to draw this line right here, just a really good area, part of the bottom of our support area. And we've been having this move up in the RSI, giving us this bullish divergence. And then boom, we just went off to the races. I expect a little bit of a pullback, and then boom, another little jab up into this area here, which will take us north of 16.5. I've always said that in a couple of years, we're going to see silver back up over 20. I can't tell you when, but it's going to be back up there again. And again, we're just following the price action and seeing where it leads us, but there's a lot of money to be made in it. Same thing with energy. Oil is an interesting animal right now. You can see oil has had this huge move up, and we broke out of this zone right here. You can see the RSI. What What was really interesting in oil is as we were making this straight shoot shot down like that, right? Every day, almost every day, we were just going down. We took a short here, did very well in the oil market. But as we've been going down, we've been in this kind of tight range, like a coil winding up on the RSI. And then boom, we sprung like that. We were long gasoline and oil in this area here. Then we've just been kind of sideways, a very tight spring right here like that. And then boom, off we go again to the races like that. Now we're sitting right here. I think longer term, and let me define long term and short term because these markets are all topsy-turvy. I think long term here would be 90 days through the end of the year. I think we're going to see a little bit of strength, or short term. I think we're going to see a little bit of strength, but longer term going into next year, I think oil is going to give itself back up again. There's just too much overhead supply. And the Iranian deal, Iran puts their oil on the market, it's going to send it back down again. But we have been trading oil to the upside, and we've done very well. Same thing with gasoline. We've been doing that as well. And for our members that can't trade futures, I've got ETFs that we play that really make this really a fun trade. Agriculture, we've been doing the same thing here too. We've been playing this to the upside. This is our third move in the ag market, whether we've been playing corn, wheat, or soybeans, and it's worked out very well. Okay, so those are some of the markets that we've been playing in. So for our members, I will see you guys tomorrow night, Sunday night, with our weekly watch coming up for the next week. Weekly market watch. If you're a non-member, I highly recommend you check out our services. We've got some specials going on. We've had a good year. And I think it's going to get better, especially 2016. I think 2016 is going to fool a lot of people in a couple of different areas, especially in the commodity market, and we're definitely going to be in the middle of it. All right, everybody, have a great weekend, and I will be in touch with you. Members, I'll see you tomorrow night for our weekly market watch coming up for next week. Okay, have a good one, everybody. Bye now.